It's good. Hello, hello. Let's make sure this audio is good. Can you guys hear me? All right, welcome. How I'm navigating this interesting transition in the real estate market. I feel like we talk about the same thing every single time. Uh, Today what we're going to talk about again is looking for some cash flow. So that's what we're doing. I mean, we're looking for different types of opportunities. But before we dive into that today, I want to welcome everybody. We got YouTube, Facebook, LinkedIn, Twitter, hello, Instagram, TikTok. What? Hi, Robert. Can we close that door, please? Welcome. TikTok people, are y'all just scrolling through the TikTok lives and stumbling across this? Have y'all checked out the TikTok lives before? It's pretty wild, the weird things people do on there. But we're not doing anything weird today. We're talking about cash flow. So, all right. So how we're navigating this market. There's a lot of different opportunities that are available now that weren't available the past few years. It's really important now to, if you weren't buying for cash flow previously and you were banking on appreciation, which wasn't a horrible strategy over the last 5 years or so, you need to start looking for cash flow now. Where do we have people tuning in from? If you don't mind, please go ahead and comment where you're watching from, what real estate market you're participating in, and where you're at. TikTok, where you're at. Instagram, where you're at. Facebook, LinkedIn, Twitter, YouTube. Gia doesn't want to be on today. Nope. Where are you guys tuning in from? What real estate market are y'all in? We're here in Austin, Texas, and we're in the Austin, Texas real estate market. So in the Austin, Texas real estate market, if you're able to get cash flow and appreciation, which is possible here in Austin, then you are doing a good job. San Antonio, is that Robert? Let's see here. Trying to draw this out. All right. Oops, accidentally drew an N. I mean an A. No appreciation. Sorry, guys. Give me a second. I'm drawing this out for you guys. All right. All right. So here's the 4 quadrants of cash flow and appreciation. Hopefully, I drew this out right. If not, I'll explain it right. So here are the 4 quadrants. And we're going to go through kind of where you want to be, where you don't want to be, what might work, what might not work. And we're going to tell you where you want to try and land at, which is right here in quadrant number 4. All right, so quadrant number 1 has no cash flow and no appreciation. This is a market that you want to avoid. This is an investment that you want to avoid. You do not want to buy real estate, not collect cash flow, and not collect appreciation. There are I don't know, y'all know a place like this, no cash flow and no appreciation. Why would you make this investment? You're either A, gonna break even and your investment's not gonna grow in any capacity, or you're likely gonna lose money. This is the scenario where you're likely gonna lose money. Now, this could be you if you bought in a good market, but let's say you bought in a good market. Let's say you bought in early 2022. Let's say like January of last year. You bought a property here in Austin, Texas. It did not have any cash flow because you were betting on appreciation. But little did you know, Federal Reserve would start raising rates. And the moment that the Federal Reserve started raising rates, your appreciation ceased. And matter of fact, your property value started decreasing instead of increasing. And if you're in this category, then you're probably underwater. You probably bought at the top of the market. You're probably not getting any cash flow right now. And you're probably underwater. Your property is probably worth less than what you paid for it. It may even be worth less than the debt that you got on it. Not a good scenario. You want to avoid investing in something that has no cash flow and no appreciation. Now, this is worst case scenario. Now let's go to scenario number 2, quadrant number 2. This scenario is no cash flow, but you get appreciation. So the issue with not having cash flow, and I'm just telling y'all this from experience, because when we were in quadrant number 2 and we were getting like 30%, 50% appreciation on our property values, it didn't really matter that we were losing $200, $300, $3,000 a year in cash flow after all operating expenses and everything, because we were gaining 100 grand, 150 grand, $200,000 worth of appreciation on our properties. And the net, made us extremely positive. And so it didn't really matter that much to us. But I'm telling you, the moment the market shifted and we ended up started going into quadrant number 1, it was a big issue, because not only is your property value decreasing, you're not gaining that appreciation, but you're losing money every single month. Even if you're breaking even on a property and you think that you're not losing money, you will likely lose money. There's always something that comes up. There's always a water heater that bursts. There's always the old AC unit that needs to be replaced. There's always some freaking freeze that comes through Texas or whatever your city is, and or a flood if you're by the coast, and now you got to pay for this, this, and this. There's always something that happens. Property taxes increase, boom, you're negative. Insurance increases, boom, you're negative. Unexpected maintenance requests, boom, you're negative. There's always, you're vacant for one single month, boom, you're negative. There's always something that happens that will cause you to lose money if you're breaking even on these properties. So getting appreciation is good, but you just have to weigh that risk of how much appreciation am I getting versus how much cash flow am I losing. Quadrant number 3, cash flow but no appreciation. Now, if you would have asked me this a couple of years ago, I would have said, I don't necessarily like quadrant number 3 because I really liked that appreciation that we were getting. But quadrant number 3, with cash flow and no appreciation, is really not that bad of a bet. You of course want appreciation in your properties. You want to buy in good markets. You want to buy in towns and cities that have thriving economies and states that support your investment in real estate. And appreciation is where you're going to increase your net worth and your wealth. But if you're getting cash flow, there's one thing that you can bet on, and you can bet on the fact that it's consistent and it's going to come every single month. We have properties that are here still, no cash flow, but we do have appreciation, not as much as we were getting. And I'm telling you, the ones that do get cash flow look a lot better because they don't cost us money every single month. They're easier to get loans on. They're easier to pull debt out of. What do you got?
Unrelated question, but can sellers sue buyer if buyer didn't show up on closing?
It's a good question. We'll get to it in just a moment. So the cash flow is really important because let's say you run the numbers and you're going to get a 12% cash on cash return on your cash flow from the money that you put into it. You can pretty much count on the fact that you're going to get that cash flow every single month until eternity. Your tenants are still going to pay down your debt. That means that you're going to be building up the equity in there, paid down by the tenants, and that cash flow can be your return. So if you would have asked me a few years ago, I would have said I'd rather be in quadrant number 2 versus quadrant number 3. But quadrant number 3 right now is not that bad, just due to the fact that there is no appreciation going on right now. Now, obviously, if you can, and this is what you should be shooting for, is getting in quadrant number 4. You want cash flow and appreciation. Now, in today's market, it's very hard to do this no matter what assets you're going out and looking at buying. Doesn't matter if you're going and looking at commercial multifamily, doesn't matter if you're looking at industrial, doesn't matter if you're looking at storage units, doesn't matter if you're looking at single family homes, duplexes, triplexes, quadplexes, depending on where you're looking, because if you want appreciation, then you need to be in a good market. And these good markets, the sellers, they don't want their prices to go down just yet. So you're not going to be buying at great prices most likely, unless you're able to negotiate it. And the cost of debt has increased so much that it's very hard to produce cash flow based on some of the prices that people are wanting and the cost of debt. Now, it's not impossible, though. I mean, we're going out and we're finding it, and we're being a lot more choosy and specific. And we were choosy and specific previously, but we're really honing in on only buying deals to buy and hold that are really good deals. But we're looking for things with seller financing. We're looking for things that we can buy subject to. We're looking for ways that we can still get appreciation in good markets, but we're able to get that cash flow right now by structuring debt payments that allow the asset to cash flow. So what questions what questions do you guys have on this? I'll answer who asked that, and what was the question again?
Can sellers sue buyer if buyer didn't show up to closing date?
Can seller sue buyer if buyer didn't show up to closing date? It depends. I'm sure there's state-specific laws. Here in Texas, there's something called a specific performance, where you can sue to enforce the buyer to perform per the terms of the contract. But if they didn't show up to close date, most of the time, the damages that you would get as a seller is the earnest money that a buyer put down. They already lost their option money here in Texas, but most likely you would get their earnest money. However, I mean, you could contact a lawyer and ask them and see what's possible to pursue the buyer for other sorts of damages. It also depends on what's written in the contract. Sometimes specific performance is not an option checked. Contracts typically dictate what each party can seek as remedies in the event that the other party breaches the terms of the contract. Huh? Yeah, did that answer your question? What other questions we got? So you want to be looking for this. Now, there are ways that you can get cash flow and no appreciation without you even owning the real estate. What you can do is you can buy a property, seller finance from somebody. You can mark it up. You can mark up the price, which would be appreciation in a sense, I guess. But you can mark up the price and mark up the interest rate and monthly payment that you're getting, and you can receive cash flow every single month. You're keeping the difference between what your mortgage payment is and what your mortgage payment or what the buyer's paying you as their mortgage payment. You know, if the buyer's paying you, let's say $2,000, but your payment is $1,000, then your profit, your cash flow would be $1,000 every single month, and you don't even own the property. You've just got a note on the property with the end buyer, and if anything goes wrong with the maintenance, the roof, the HVAC, the water heater, the appliances, anything, they're responsible for it. They're also paying property taxes. They're also paying the insurance on the property, and you're just collecting cash flow. Now, the negative to that is that you're not getting the appreciation that you're going to get, right? If you were to hold on to that property for 30 plus years, it would likely be worth a lot more than the day that you sold it to the end buyer. But the benefit is cash flow, right? So you're getting a good amount of cash flow. And if that loan stays in place for those 30 years, then they're going to end up paying you, you know, 2, 3, 4 times the actual purchase price and interest of, accumulation of over the payments for their entire term of the loan. So this can be good. There are different ways that you can do this without even owning real estate, right? You may not even want to go through any of this right now. You may just want to wholesale deals. Well, if you're wholesaling deals right now, you're not going to be able to wholesale deals that are in quadrant 1. So you need to find deals that are in quadrant 3, quadrant 4. You're going to want to find deals that cash flow. You want to find deals that cash flow and have appreciation. You may be able to wholesale one to someone who for a property that doesn't have cash flow but does have appreciation. But it's got to be a really good deal, and you really got to sell them on the fact that that's their upside, and they got to believe in that. Because right now, getting cash flow is extremely, extremely important. What else we got? Now, where can you find these types of deals? Many different ways. What you need to be doing is building relationships. You need to build relationships with brokers and agents. You need to build relationships with property managers. There's a lot of accidental landlords out there right now. You need to build relationships with other investors. And then you need to build relationships with other players in the game. So, build relationships with brokers and agents. The good ones, the good brokers, the good agents, they also have shifted with this market. They know where the deals are. They're having all these conversations. They're trying to generate their own business. We have many people that are out there generating deals on their own. They're looking for listings and other things like that. And when they find one where a creative solution might be the answer, they give us a call. We work the deal together, and we see if we can put something together that solves the seller's problem and allows us to buy an investment or capitalize on it in some sort of way. So you need to build relationships with brokers and agents. All these people right here, they have everything that you want. They have the deals. They have the sellers. They have the buyers. They are the buyers. They are the sellers. You need to build relationships with these people and stay in touch with them and cultivate these relationships so that they can continue to send you deals. Y'all can work together and y'all can help each other out. But brokers and agents have deals. For those here who may not know, you don't just have to, contact a real estate agent, sign some sort of buyer rep agreement, and go under contract with them and get locked into this contract. I mean, the good brokers, the good agents, they want to build relationships with other investors as well. They're going to bring you deals so that y'all can partner on them together. They're going to bring you opportunities. So don't be afraid of contacting all these people here and building a relationship with them. Property managers. Property managers, what do? They manage properties for investors. A lot of these investors, they may want to sell their properties. We want to sell a couple of properties that we got right now. Property managers, they have a lot of really good relationships, and they should be tuned into the local market, and they should know the local players, right? They know the investors, they know the agents, the brokers, they know the contractors. They're seeing opportunities all the time. And the property manager may not be interested in investing in these opportunities themselves. Therefore, they could partner with you. They could send the leads to you, and you could capitalize on it. And then in turn, send them some business, allow them to manage your properties. There's a lot of different ways that you can partner with property managers. You need to build relationships with investors. The real investors. Go find the people who are actually doing deals right now. If y'all are on Facebook right now or TikTok, I'm sure there's a lot of people on TikTok who make videos about doing deals and different things. But there's actually the percentage of people who are actually doing deals, who are participating in, these meetups and these online Facebook groups and things like that. The percentage of people who are actually doing deals is pretty slim. There's a lot of people out there who say they're investing in real estate and claim all these things, and they might be looking to get started just like yourself, but you need to find those who are actually doing deals and build close relationships with them. You need to find the closers. You need to find the deal finders. You need to find the people who are out pounding the pavement every single day. And then the other players in the market, meet some lenders, meet some bankers, title companies. All these people that you can build relationships with will benefit you and your business. Did you have something, Kat? So the quadrant, build relationships. Hey, by the way, this is free. Building a relationship doesn't cost you nothing but time and caring. You just have to care about the person you're trying to engage with. So much paper. All right. And look for creativity. Be creative. I don't know if I've shown this to you guys before. I know I've shown this to many other people, but I'm going to draw a small pie chart because I want to use the rest of this. All right. So if you are a wholesaler and you're looking to contact motivated sellers and pre-foreclosures, probate, divorce, water shutoff, code violation, all these different lists. If you're a wholesaler and you're looking to contact distressed and motivated sellers and your goal is to try and convince them to sell you their property at 50% of what it's worth, most likely you'll get a deal every now and then. But most of the people you talk to, this is not going to work for many different reasons. Maybe they're stubborn. They don't want to sell their property for 50% of what it's worth. Maybe they're not that motivated. Maybe they got some time. Maybe they have a certain number that they have to make in order for it to work. Maybe they got a loan on the property. There's many different reasons why you won't be able to convert 100% of these sellers into selling you their property for 50% of what it's worth or at a price in order for you to go and sell it to somebody else and make an assignment fee. And so you're going to miss out on all these opportunities right here. This is a pie chart. The black part is, 1% of all the opportunities that you're going to see, and 1% of those will work for your wholesale 50% offer. So the reason I'm saying this is don't just focus on that. If you go into all these opportunities and all these appointments and you're having all these conversations and you're trying to force people into the 1%, you're going to miss out on 99% of the opportunities. Now, if you're a listing agent, all you real estate agents here, all you guys who are going and talking to guys and gals who are going and talking to sellers, they called you, you called them. They said, yeah, I want to sell my house. Come check it out. Meet me here. Let's discuss. If you go there and try and force them down the listing route, you're also going to miss out on all the other opportunities. Maybe they would accept a 50% cash offer. Maybe they don't want to list it. Maybe they don't want to put the money in to fix it up. Maybe they don't want you to put a sign in their yard. Maybe they don't want it to go on the MLS. Maybe they don't want the neighbor down the street to know they're selling. Maybe they don't want to lock their dogs up for buyer appointments. Whatever. There's so many different reasons why people don't want to list their property on the market. And if you are an agent and you're trying to force them down this route, you as well are going to miss out on all the other opportunities. So you need to be versatile. You need to be creative. That way you can go into these appointments, you can talk to these sellers, and you can take them down any route they want to go. Hey, you want to list your property? We can do that. I can get you a cash offer. Would you consider seller financing it? hey, maybe I partner with you on this. I put the money in to fix it up, and then we list it, and we get top dollar for it. Providing many options to these sellers and being creative in these options and allowing the seller to choose which option is best for them is going to allow you to be successful, and it's what's going to allow you to take advantage of all the opportunities. Now, this is the entrepreneur way. Not entrepreneur, the entrepreneur. This is the entrepreneur way. You go in here, you provide options, you provide solutions, you listen. When I'm talking to sellers, I really don't even do most of the talking. I'm just asking questions and I'm listening. What's important? What's the motivation? What's the story? What do they want? How can I provide a solution for them? This is the entrepreneur way. You got to be creative, because if you go and you're just this wholesaler here, I mean, you're not going to do many deals, and you're going to miss out on a ton of opportunities. For you listing agents out there, if you go in there and try and force people down the listing route, you are going to miss out on a lot of opportunities. And if you don't want to learn this, that's fine. Just send them our way. We'll show up to the appointment. We'll listen. We'll provide solutions, and we'll figure out a way to get a deal done. But you got to be creative. Seller financing, subject to, partner with them. Maybe you bring in another investor. Maybe they have another property. You got to be able to be creative to figure out ways to solve these problems. Otherwise, you're not going to be able to take advantage of every opportunity that comes by. You're going to leave a lot of money on the table. There's going to be a ton of people that you're not able to help, and you're going to miss out on a lot of different deals. All right, what questions do you guys got? Where's Gia? Is she here? What questions y'all got? Creativity is the way. So let's do a little recap. All right, the 4 quadrants. We got no cash flow, no appreciation. Avoid it like the plague. No cash flow and appreciation. May be great. Weigh your options. Determine how much you're going to be losing in cash flow versus how much you're gaining in appreciation. And weigh out if that appreciation is going to stay there for forever. How good of a market is this? Cash flow, no appreciation. Good, but you do want to collect this appreciation if you can get it. Cash flow and appreciation, this is the sweet spot. This is what you want to look for. These are the types of deals you want to buy. This is what you want to structure and negotiate. Now, where can you find these? Especially if you got no money, but also too, even if you do got money, you need to build relationships. Brokers and agents, property managers, investors, other players in the market. You need to build relationships. You need to make these connections, and you need to nurture these so that y'all do deals together for a lifetime. These relationships will feed you for forever and ever.
Someone does have a question about submitted deal on our website. Do you want to discuss that? On your website, when I submit a deal, it says, what profit are you making? How much would I make?
I don't think it says that. That wouldn't make sense to me. 1 second. Yeah, let's share our screen here.
Oh, this is for TikTok.
Yeah, I know. Entire screen. Let's share our screen. Cool. Can y'all see my screen? All right. So you want to submit a deal? You just go to our website, teifkerealestate.com. Hover over this investors tab. Click submit a deal. All right. Let's run through this. So if you got a contract, it's all right. I got it right here. We'll show it to them or something. If you got a contract, you can upload it here. Obviously, this is your first name, your last name, your email, your phone number. The address is the address of the property. How is the deal sourced? So is this just a Zillow listing? Did a wholesaler bring this to you? Are you a wholesaler? Did you cold call the owner? Were you driving for dollars and you skip traced them? How'd you find the deal? Next is, what is the seller's motivation? So why do they want to sell? What is the story? What is their motivation? is their motivation? Or is this a listing listed at above market value? What?
He's just saying he's an investor. All his deals are listed with agent.
Yeah, I'm just running through here so that everybody can understand all the questions. So what is the seller's motivation? Why do they want to sell? This is what you put in this box. How can we make a profit? So is this a cash flow deal? Do you think that we can get this under contract, wholesale it to somebody else, make a profit that way? Do you think that we should buy this via seller financing, wrap it, seller finance it to somebody else, and that's how we make a profit? Do you think that this is a good fix and flip? How do you foresee this deal making us together a profit? Next is, what is the asking price? What are they trying to sell for? What's the ARV? What's ARV after repair value? This means that if it's a single family home, after we put the 30 grand into it to fix it up, what is it worth after that? Next is the repair estimate. So, how much in repairs do you think this property needs? And then the story. One of the most important lines on here. What is the story? Why do they want to sell? What's going on here? What are they looking for? What information have you gathered about the property? Paint this picture, tell the story about this deal. And then, is it under contract? Yes or no? And then you submit. So that's what all those mean. That's how you fill it out. If you want to partner on deals, submit them here. TeifkeRealEstate.com, hover over investors, submit a deal. And then boom, here you go. And that's what all those mean. So how can we make a profit? That's what it means is, where's the money in this? Are we going to buy it? Tell me. If you're present today, tell me what quadrant we're in. Are we in quadrant 1? Is there no cash flow and no appreciation? Then we don't want it. Is there no cash flow and appreciation? I hope it's a good amount of appreciation, but how much cash flow are we losing? Is there cash flow and no appreciation? How much cash flow are we getting? Is there cash flow and appreciation? That's great. Let's check it out. And so that's what that means is, how are we going to make a profit on it? But you can go to our website and submit deals. We want to buy real estate with you. We want to partner with you and do deals with you. The reason we do this is, number one, to help you, but we want to build a relationship with you. Just like I was talking about up here, we want to build relationships with all you guys and gals. We want to buy deals with you. We want to do deals with you. And we want to be successful together. We want to grow with each other. Relationships. Last but not least, I'm going to stop this screen share. Last but not least, be creative, the entrepreneur way. Don't go down these with only one exit strategy. You need to be versatile. You need to be able to move with the situation. So go in, be open, and take the seller down whatever route they're wanting to go. Any other questions? All right. Oh, yeah. Before we go, we got something for you guys. We're about to release a new offer. If you weren't able to attend the Entrepreneur Real Estate Workshop, we've got the live recording of the workshop. We've got the workbook. We printed out all these copies, and we're not going to sell them to you. All I want you to do is pay for shipping and handling. We already paid for the copy. You just pay the $9.97 it cost me to ship it to you, and we'll send you this plus the live recording for free, and you also get 5 free bonuses. You get a live recording we did on how to invest in real estate with $0, teaching you all the creative ways to make money here, even if you got no money. Second one is how to make money in a recession, how to invest in this recession that we're currently going through. It's another live recording that we did. And then the last 3 free bonuses are 3 short courses on finding great contractors, number 1, knowing your market, number 2, number 3, lead generation tools, teaching you what softwares to use, how to set them up, how to start maximizing your time. All that stuff costs like $500, but we're going to give it to you for free. All I ask is that you pay for the shipping that it cost me to send this to you. It's $9.97, and we'll ship you the book and all those bonuses for free. We're about to launch this by the end of the day or maybe tomorrow morning. So if you want to take advantage of this offer before anybody else does, send us a DM on here. Otherwise, you'll see the links when they come out. But there's only a limited amount of these. We don't have, we don't just keep a million copies of these stashed in some warehouse somewhere. So we printed, a limited copy of these. Once they're gone, they're gone. So take advantage of the offer before it goes away. Thank you all for tuning in today, and we'll see you next time.